Hey guys, and welcome to the Working Money channel. So as you guys can see, the sea of green continues. Bitcoin up 4.55%, Ethereum 5.68%, XRP 7.92%, EOS with a whopping 17.89%, and all the charts are looking similar. When one coin goes, they all go. Someone was telling me yesterday that, or a few people rather, were telling me yesterday that Ethereum's hard fork is coming down the pipe. And so Ethereum was the reason for this pump. But it could get the market started and it could trigger something bigger. I think we've all kind of, been in this bear market for over a year now, and we're feeling it. We're kind of really getting a sense that we've seen the bottom. We've seen lows stabilize for quite some time. And I feel like we're getting the sense that the bottom is near. One other thing that I wanted to just kind of mention here is that volumes are in the billions. Whereas before it was only Ethereum and Bitcoin whose volumes were in the billions. Now we can see XRP, EOS, Litecoin, just to name a couple more. And obviously Tether here, I think some people are probably taking their profits off the table. Nevertheless, guys, I'm in it to win it. I'm not here to make a measly 10% or 15% on my digital assets. I'm waiting for the big show. And the Bitcoin chart here, as you can see, and of course we use Bitcoin because it is the beat. It is the pulse of the crypto market as we speak. And we saw a huge bullish day here. By the way, this is Bitcoin on a daily, and we can see little movement here today. I mean, there is a lot of headroom here and leg room, but the body of that candlestick is still pretty short. So we'll kind of see where that goes. Ultimately, we do have to break the 4,300 mark. I would say 43 roughly around here in order to keep maintaining that bullish trend. But when you look at the news, it's really interesting because Bitcoin, everybody's got their eyes on Bitcoin and these digital assets. Bitcoin hits highest volume in 9 months. Is crypto ready to take off after massive gains? When you just look at some of these articles, the feeling in the space is not as negative as it had been. Bitcoin price breaks medium-term resistance after surging 8%, near $4,000. And that was the number that everybody seems to be looking for in the space right now. $4,000. I say 4,300. I mean, 4,000 is a nice round psychological number, and it did break that number, but realistically, we need to break this, or even, I mean, this is the old resistance that formed, and that's about 4,500. So, I mean, if we can kind of break that 4,500, 43, 45, I mean, Bitcoin moves fast. I know when you say 43, 45, that's $200 apart, but realistically, when this thing moves, it moves, and that's great for you and I. More news here from CCN. Put your money on crypto for the long term, says Major Wealth Manager for Pensions. Is there anything else down here? Bitcoin, Ethereum rallies as market gains over $5 billion in a day. Crypto bulls returning. And so we're getting this sense of positive recovery. Is the market returning, and is this not a false alarm? Is this the real deal now? Well, I can tell you something. When we were back in, and again, this is Bitcoin on a daily. Guys, I like to show Bitcoin because Bitcoin gauges the pulse of the market, as I've said many times. So now that we've kind of seen this whole long downtrend over what has been probably 13 months or so, we are only now getting some optimistic points of views from people in the space. And not only that, we're getting optimistic perspectives from institutional investors, financial analysts, and so on and so forth. Now, I just kind of wanted to compare that to back in, where was this, February of 2018, when we saw a bit of a spike up here. We were not getting that same sentiment when we saw this. Although this was more price action. We went all the way from 6,600 back up to 11,700. And could you imagine seeing this pump back then, thinking to yourself, oh, okay, no, the bull run's coming, but we weren't getting that same sense of security from analysts, from anybody. Same thing here. I would argue back in April when we saw a bit of a pump here, went from 6,300 all the way to about 1,000 again. I don't feel like we were seeing that same positivity in the space. And now that we've seen this dump and that we've gone so far lower and we've hit this bottom floor, 3,200 approximately, 3,300, and now we're seeing this movement up here. Only now are we starting to hear the positive news. So On Twitter, this is a tweet from Ecos XRP ECOSSEXRP1. It's coming, and this was a article back from last month, I believe, a couple of weeks ago, NASDAQ's article, and it's interesting because this is, January 29th. But this is good news because when NASDAQ is putting out these articles, we know it's the real deal. Believe us, it is coming. Why the blockchain bull market will be back. And so they describe the dot-com boom. Just over 18 years ago, the internet died. You may think that I have gotten my history wrong, have forgotten I'm writing for a website, and don't know that 52% of the world's population is wrong. But for the less informed observers of the day, the dot-com crash of 2000 really did seem like the end of the web. And we got to remember that, guys, when the dot-com crash happened, it was like, oh, the internet's dead. Like, this is not going anywhere. This is just a fad, right? So many people were down on it because stocks were down and people they had lost confidence in it. So it's a really interesting and I think very apropos thing to compare cryptocurrency to. Tech folks hardly had a chance to recover from Y2K scare before something far more frightening happened. Bubbles popped, stocks dropped, and companies closed. What did the lessons of 2000 mean to us today? I won't claim that 2018's last few months have made anyone in the blockchain industry happy. There are too many shuttered companies and too many emptied bank accounts to celebrate. But from my perspective as an executive in the blockchain industry, it's clear that blockchain today stands where the internet was in mid-2000. It's down but not out, and it's poised to come roaring back, and that is the most important part of this. It's poised to come roaring back, and there are reasons for that. Cryptocurrencies are currently doing better than they were a month ago, but we shouldn't assume a quick return to crypto's former heights. The mining difficulty for Bitcoin recently dropped 9.5%, and most coins are seeing only modest gains. We cannot expect January 2019 to suddenly become the next December 2017, and frankly, a sudden return to the market cap would likely be counterproductive for the industry. So we got to remember this was written a couple of weeks ago, and around that time we were here in the doldrums, basing in this double bottom here. But since then we have now seen a bit of a return. So we got to keep that in mind while reading this. And she does bring up another good point here in that we cannot expect a return to December 2017 because that's just not sustainable, guys. We need a slow and steady increase. The technology should speak for itself. Too often it's been subordinate to speculative frenzy. In the coming months, we need to focus on expanding our user base, improving our protocols, scaling our networks, and fine-tuning our ideas. There are already signs of a coming crypto spring, but its arrival will be gradual. And when the market does heat up again, we must remember that challenges remain. After all, what sort of spring goes by without a little rain? Now that the prospect of getting rich quick has receded into the distance, blockchain is once again the domain of true believers. While some of the hodlers who've stayed in the market may keep an eye on their bank account balance, the majority insist that blockchain will change the world and that the technology's best, brightest, and busiest days remain in the future. I number myself in this crowd, and that's why I'm so enthusiastic about the opportunities the market correction offers. By the time we emerge from this slump, I expect the crypto and blockchain ecosystems to be far more complex, resilient, and accessible than they are today. What lessons should blockchain pioneers take from the past? First, that speculation and theorizing, while necessary, are not sufficient. A white paper and a website is not enough for survival. Blockchain needs to provide a concrete benefit. And guys, that's why we're invested in XRP, right? A concrete benefit. It's a coin that does something that will change the world, and it's not just like all these other 2,000 and some odd cryptocurrencies where we don't even know if it's a registered business, quite frankly. It could just be some guy who coded a coin and is selling it, out of an abandoned storefront plaza somewhere in North Dakota. Who knows? Who knows what it is? Anyways, the author goes on to talk about the reasons why blockchain will succeed. But in the end here, internet pioneers didn't quit in 2000. They continued to add new features, refine their products, and learn from their markets. As the investors fled and the lights went out all over Silicon Valley, the earliest Google employees remained hard at work. And guys, that's the important thing to remember. The people who believe in the industry will keep going, will keep working, will keep pushing to make the industry strong. We've got Brad Garlinghouse, David Schwartz, Chris Larson, everybody at Ripple really trying to make the company robust enough to make it in the 21st century, to change the face of payments. And they are the hardworking employees, similar to the Google employees back in 2000. They started selling ads that year. In 20 years' time, will the blockchain industry look back at 2019 the same way internet giants look back at 2000? I certainly expect so. And so a very kind of positive article from the NASDAQ. Okay, this is the NASDAQ, guys. This isn't some small publication either. We got to take that into consideration. We really do. One more thing on Twitter. This is Ripple Red. That's at Blockjane79, at BLOCKJAYNE79. Some measured perspective, and she links an article here. And this is the article, Traders Bull Run, 5 reasons a legitimate bull run is coming and soon. And so I'm just going to go read some of these reasons here. Institutional infrastructure, breadth and depth. Beyond individual stories about Goldman Sachs, Fidelity, or Bakkt, 2 hedge fund managers spoke extensively about the breadth of institutional involvement in crypto that is on its way to the market. Goldman Sachs, Fidelity, DRW, and AD Ameritrade, ErisX, BlackRock, and Coinbase, NASDAQ backed, and the NYSE, and on and on and on. So yeah, institutional money, we know it's coming. OTC markets are very robust, in capitals. One trader told us that the volume on the OTC markets is at a turning point, and volumes have recently spiked higher, and not for sellers, but for buyers. Smart money sees the 2018 bear market as an opportunity to buy digital gold on the cheap and stash it away for a couple of years. If traditional markets weaken any further, the OTC buyers dynamic will only increase and push Bitcoin prices higher. Number 3, the SEC just gave muted guidance via enforcement that should embolden the tokenization movement. The latest enforcement actions by the SEC scolded 2 separate ICOs, providing further guidance to the tokenization movement and its actors. The short version is essentially this. ICOs aren't illegal, and we really don't mind them. Just check in with us, pursue registration, and you should be good. The ICO enforcement action taken late last week amounted to small fines given how much those ICOs raised. A virtual slap on the wrist, and neither announcement claimed fraud of any kind. So we see the government is, in fact, allowing ICOs. They just need to be registered. These guys need to do their due diligence, and they're ultimately good to go, just to prove that they're not fraud. Fair enough. Some altcoins are being destroyed while others are pumping as we speak. One crypto hedge fund manager discussed Verge as an example of the kind of waste that needed to be burnt out of the ecosystem for the next bull run to begin. A token like Verge, built on nothing more than vaporware, hype, cringe partnerships, and stickers on rented Lambos are what needed to go away before capital could consolidate and find its way back to the likes of projects that are serious and legitimate. Bitcoin, Ethereum, Monero, Stellar, and others. These are teams that are legitimately attempting to build something that lasts, and you can see money flows moving in that direction. Yet today, the altcoin markets are flying on the backs of the strengths of Ethereum, and that's what we're seeing in the market currently. Bakkt arrives soon enough. Bakkt brings serious force to the crypto markets by providing tier 1 institutions the ability to accumulate and trade Bitcoin no differently than they trade gold, oil, natural gas, silver, copper, etc. Trading Bitcoin globally on the ICE exchange networks is 10 times the size of CME and CBOE futures trading. The daily gold futures volume on global exchanges routinely better than 200 billion. Yes, that is the daily volume. Daily! The late 2017 bull run was somewhat fueled by the Bitcoin's futures ramp up on the CME and the CBOE. Expect a similar market reaction to Bakkt. So guys, 5 really solid, great reasons why a legitimate bull run could be coming soon. A lot of it has to do with institutional money coming in. I'm glad it's being spelled out here, and I'm not the only one saying it, so thank you very much to Ripple Red, that's at Blockjane79. Also thank you to ACOS XRP1, that's at ACOS XRP1. For your tweets today. Some food for thought, guys. We're starting to see movement happen in this market. I think you'll be pleasantly surprised sooner rather than later. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.